Hey, this is Trader Travis, and today I want to run a particular challenge by you that I'm having, and I want to see if you can help me out with it. As you are probably already aware, we have over $2,000 of free information on our website here, learnstockoptionstrading.com, and there's a web-based course, free web-based course on there. And every now and then I will hold coaching programs, but my plan was that to continue to add value to people's lives by providing free information to the community. But what I found is that the coaching program takes so much of my time. It's so intensive. We really focus on students a lot, is that I don't have a lot of free time left over to create more free tutorials. And so what I'm thinking about doing is, within the program, I allow students to, peek over my shoulder as I trade. And I send them weekly trade recap videos, giving them my analysis on the market and analysis on my trades. So what I'm thinking about doing is taking this free web-based course, giving you a step-by-step guide to go through it so you understand, all about option trading and understand the basics, and then plug you into our recap videos once a week so you can also see the recaps of what trades I'm in, and so you can learn a little bit more about option trading. And so what I want to do is upload this week's trade recap video to you so you can watch it. And what I need you to do is, send me an email, let me know, leave a comment, and let me know if this is something that you would want more of, if you think what you would find valuable. And I can go ahead and copy you every week on those particular videos. So that way I'm at least still adding value to your life, and I can solve the issue and the challenge I'm having about, finding more free time to add more tutorials on this website. That way I can at least send you more information once a week. So let me load that video. And again, once you watch it, let me know if this is something you would find valuable and if you want more of it. If I get enough people to say yeah, then next week, look forward to your next trade recap video. All right. So you take care. Hope you enjoyed the video. Bye-bye. Hello, this is Trader Travis, and I hope you are having a great day so far today. And this is another trade recap video where I'm going to update you on the 3 trades I am, DIASPY and IWM. And before I do that, I actually received an FAQ in the members area wondering if I was still on a trading break. And let me show you that question and read it to you here. And the student was mentioning that on one of the last calls. I mentioned that I'm holding off on trading because the big 3 had flattened, and she was curious to see if that's still the case. And she noticed that Thursday they were all starting to trend up. Is that a big enough trend to place directional option trades? She was looking at eBay across the day. All the DMA criteria is met, and as a confirmation of volume is above the 30-day average. In this case, do we hold off due to the weakest big 3? We'll move forward cautiously. Now, if you all recall, remember for this course, I'm actually teaching and guiding you all on everything on ETFs, because I have to make sure that everybody stays on the same page. It's kind of hard to teach a newer course if we're all doing different things. So for this one, I'm only focused on the ETFs. Now, as far as the ETFs in my trading, yes, technically, I'm still on a break. And actually, let me show you real quick as to why that is. So now let's pull up the chart here. I will actually cover these trades I'm in here in a second, but let me pull up the chart of the S&P and the Dow. It's really the S&P. The Dow is actually doing okay. And if you look at the S&P, this was a all-time high level right here. And actually, if let's zoom in a little bit. Let's get it really precise. This is October 2007. This was the top of the last bull market that we had. It closed right here. That day right here, I'm trying to get this line on, is the close, which was the highest close ever. All right, the line doesn't want to work with me today, so we'll just leave the line right there. But anyway, that was the top. That was an all-time high back then. And, everybody was excited, saying the market was just going to keep going back up. At that point, it had been going up since roughly about 2003. So about 4 years. But what everybody didn't know, because you can't predict the future, what they didn't know is that this was the top of that bull market. And, we were about to go into one of the worst bear markets since the Great Depression. And that bear market caused a lot of pain for people. There were suicides. There were people who couldn't retire. I still sometimes, get shivers thinking about all the horror stories I heard, and I actually watched because I was on the board of trustees for one of the largest employers here in town for their retirement committee. They had asked me to be on the board of trustees, to give my advice. And I saw tons of people cashing out. I saw tons of people watch, 10, 15 years of their hard work go straight down the drain where they lost money in their account. And so it's tough trying to advise people through all that when they don't have really many options, as far as what you can do with mutual funds and 401ks and all that. Your hands are kind of tied, essentially. So, that's why I'm not I do my best to, if people are in those, to teach them the best way to handle them. But as an option trader, we have so much flexibility. We don't have to sit out and lose money. We can actually double or triple our accounts during these bear markets. But anyway, enough of that. The main point I was trying to tell you is that this is a very emotional point because everybody remembers what happens after this point. And so that's where the S&P is at again right now. And so, there's a lot of people watching that line, wondering if it's going to surpass that. If it does surpass that, they're wondering if there's going to be another crash. There are people already predicting another crash just because that's what happened last time. And I try not to get into those prediction games because it makes you biased. It actually negatively affects your trading. Because that way it's like you'll convince yourself to trade in the direction of what you think the market is going to go. And no one ever likes to be wrong. So even if you are wrong, you fight resisting, admitting you're wrong, and you will keep, no, it's got to go back down, even if it keeps going back up, so that's why I don't play that. I just sit and wait and you evaluate the market is doing. You trade what you see, not what you think you're going to see. Listen to the story it's telling you. It's going to tell you what it wants to do. Just, be a good listener and listen to it. And so anyway, based on that, we can see that it's still right around resistance. It's kind of climbed up just a tad bit. I could get super aggressive and be like, oh, it poked above resistance. Let me jump in. But I am more of a, cautiously optimistic type of person. And so I want to wait at least a few more days to get some more spacing between this line of resistance and, where the stock is at. Now, remember, resistance isn't this line I drew because someone else could draw the line somewhere different. As you saw earlier, I was trying to move the line because the resistance really is down here. And so, S&P is literally, above resistance. But, if we come back, I won't do a 10-year chart again, but if we come back to the all-time high, the S&P is, I think, at an all-time high right now. I think the all-time high was like 1565 before this or something to that effect. So, we're still around this area. Remember, resistance is in price area, and that area is in different areas depending on who draws the line. It could be here, it could be here. So I kind of think of resistance as like a, let me do a duplicate of a channel. So resistance is really like a channel. It's a price area. This area right here is where the stock has had trouble proceeding past. Now we'll do a 10-year chart. So you can see that this price area is where the stock was at way back in 2007. And now when we drill down to present day, this price area is where the stock is at right now. And it's still close to that. So, you could get aggressive and jump in now if you were that type. But, over the years, I've just learned, what's the hurry? I'm in really no hurry. In the grand scheme of things, waiting a few weeks, I will admit that it feels like an eternity. I was actually talking to other coaching students from the Success Academy, because just like you, I give them the same benefit. For you all, I'm trading in real time. I'm trading a demo account for you so you can see, how the strategies play out in real time. And for them, I do the same thing. And this account uses every strategy I've ever learned for the most part, including the DMA template. This one is up 27% for the year. We're about 3 months into the year. And so I am pretty much out of all of my trades, even in this account. I'm in one trade, such a small dollar amount, I'm just letting it ride. But I'm out of trades there too also. And it's only been about a week. And I was telling them that, it feels like an eternity, when you're sitting here. Let me see, this trades I open on 3/14 as of this recording. It's, it's what, April 2nd. So let's see, 3/14. So 1, 2, about 2.5 weeks. Now, in the grand scheme of things, what's 2.5 weeks really to a year? When you compare 2.5 weeks to a year, that's nothing. But as a trader, when you're sitting on the sidelines, or if you're in a trade, oh my gosh, it feels like an eternity. You're like, will you hurry up and move stock so I can make some money? Because you just feel like you're missing out on a lot of profit. And over the years, like I said, I've come to enjoy this break and just let it sit and be patient. And it usually works out to my favor until, instead of me getting hyper emotional and start tinkering with stuff and, forcing the market to bend to my will. Like, I want to trade, so I'm going to force myself to look for some trades. I want to force the market to bend to my will. And so like you scan and you scan and scan until you find a trade and then you make it. And, sometimes it works out, sometimes it doesn't, but more often than not, for me, it never works out. So I was like, you know what? Let me just sit tight, because this is a fact that most amateur investors don't know. 75 to 80% of all stocks will follow the market's general direction. It doesn't mean they're going to trade neck and neck exactly like the general market. But for the most part, the DIA, this is the S&P we're looking at. Let's pull up the Dow. For the most part, most stocks will follow the direction of these markets. And so I'm like, well, why rush to trade when most of my stocks are going to do what the general market is going to do anyway? So again, you all have another secret that most people don't know. You're trading these ETFs. If you're following what I'm teaching, you're trading these ETFs, and you're bypassing that emotional trauma that most traders are going through because they're focused on stocks when they don't know that 75 to 80% of all stocks follow the general market. So you just trade the general market and you can avoid all that drama. It does take some more patience, but again, discipline and patience are two ingredients for success and two ingredients that you will have to become a millionaire. If any of you all want to become a millionaire, assuming that you're not right now, that should get you excited that all you have to do is not all you have to do. But I tell you what, if you develop those two traits, those millions will come much, much quicker. It's amazing. So how the universe, God, or whatever you want to call it, rewards you for your diligence in developing those things that most people don't develop. And so when the world sees that it can trust you, when the world sees that you are a step above the rest from what everybody else is doing, it rewards you because it knows it can trust you to do the right thing, and you will do better things, because people who have those qualities are generally can help change the world for a better place. And so, you shouldn't be surprised when you're blessed with more riches and more fortunes, because you won't squander your riches like most people. But enough for that. Let me go here and actually update you on these trades. Let's go ahead and get the updated pricing here so you can see where these trades are at. So according to this platform, every platform is going to be different, but think of somehow as a mark price. The mark price is the midpoint between the bid and ask spread. So if I want to get the actual price of what it would cost me to close out this trade, let me actually get rid of the spreadsheet here. So I'm in a May 146 call option, and so actually I will have to be, it's only 45 days left to expiration. So I'm going to have to close out this trade here soon, because I'm going to hit the 30-day rule. So hopefully it takes off soon, starts to take off in price pretty soon here, or else I'm going to start losing money. Okay, so the Dow is doing okay. It's up 18%. So again, in the grand scheme of things, waiting, it's been 2.5 weeks since I got in these trades. Now, let me ask you this. Well, I know for a fact, I won't even, just think about this. I know for a fact that most mutual funds only earn about 9 to 11% a year. And if you join the Success Academy, I'll show you the report that proves that most mutual fund managers fail each year. Their benchmark, if you don't know, is to beat the S&P 500. For the most part, their performance, they try to match the S&P 500 or beat it every year. And I think it's 85 to 90% of them fail each year. So they don't do what you pay them to do. They don't beat the S&P, and they average maybe 9 to 11% a year. So that's all year you have to wait for that kind of return. Here I waited 2.5 weeks for 18%. So I could cash out now if I wanted to. I won't, because I haven't received an exit signal or anything like that. But still, when you think about that, so was that worth it? Waiting 2.5 weeks to get an 18% return on investment? Have you ever earned an 18% return on investment in a matter of 2.5 weeks? So that's some perspective for you. Generally you would have to wait a whole year for this. Now you're only waiting a couple of weeks. Even though, like I said, I'm sitting in cash in most of my other account. These ones, I only invested a little bit of money, but I still had to wait. For the most part, it's been underperforming since I've been in it. But, since I've been in this, I've been waiting 2.5 weeks for this 18%. And so was that worth it? Absolutely. It makes it now more rewarding to have that patience and sit tight. Okay, so that's the DIA. And I think the IWM is actually holding the these trades back anyway. So that's if I was only in DIA, which I'm not. I'm actually in 3 trades, and I think IWM is holding this back. So May 95, let's see. So 129, let's get the bid price. So that's what I would have to exit at. All right, so that one is holding back. I'm actually losing $50 or 28%. So now let's flip to the upside. I'm going to be the what they call it, the devil's advocate, where people say, oh, so I talked about the glories of waiting 2 weeks for 18%. Now, this teaches you the power and pitfalls of options trading. All right, so now look at that. Let me make sure I got that right. Hey, that's a heavy loss there. Yeah, that's right. All right, so we'll look at the chart here in a second. So that's $50 or 28%. So wow, I've lost 28% of my investment in a couple of weeks. That's a lot, so you're like, wow, I'm losing a lot of money here. And, so that might freak people out because, this is like what you would lose in a bear market. Your mutual fund would lose about 30-50% in the bear market. But now you're losing this in a couple of weeks. So imagine the people who have their entire account, invested on one trade trying to get rich quick, which I used to do. So I'm not going to, chastise them or talk about them too much, because that's what I used to do. That's why I teach you all what not to do to avoid my mistakes. And so when you have your entire account on trades, or you have a bunch of trades open, sometimes you can have the same effect of having your account on one trade by having a bunch of trades open that risk way too much money. And so you're watching your account bleeding money every day, and you get to that point where you can't take it anymore, and you sell. You don't care what happens. You're just tired of losing money and you sell. And I think I showed you that not too long ago, where it was a stock where I exited and it kept going back up after I exited. And I exited based on emotion. I was losing money in some other trades, and I was like, I can't take it anymore. I'm tired of losing money. I closed it out, and the trade took off, and I would have had like a 400% return on investment if I kept it. So now it's like a SPY. That's 199. So this one is actually making money. All right. So about 6%. So all in all, I'm down about 7. Let me verify that. Let me come here and see. In the broker platform. So it shows, the broker platform actually shows I'm up about $6. So somewhere I got my math wrong. Actually, I may have not got my math wrong. The stocks are still moving because I'm recording this in real time. So these prices actually have adjusted. But so based on this, it shows I'm up about $9. So you can see that SPY and DIA are doing okay. DIA is doing the best, and IWM is holding us back. So if I manage my account by dollars and cents, I could close out IWM now because I was emotional. It's making me lose money. I'm mad at it, and I'm going to close it out. But let's look at the chart, because mainly, as I explained to you, I'm a technical trader. I try not to manage my trades by emotions. And hold on one sec. Let me pause this video. I'm recording this in my office, which is smack right in front of where the sun rises every morning. It is giving me a beating. The sun is beating in my eye. I can't even see my computer screen now. So let me pause this real quick. Okay, I am back. Much better now. All right. So DIA. So let's look at DIA here. Let's pull up a 10-year chart of DIA too, just so we can keep a reference. Just based on, generally, I wouldn't pull up a 10-year chart. I was like, 10 years? I'm only trading on a 6-month daily chart. But based on, where these prices are, we can see that, okay, looking here, this was the top of the last bull market for here in 2007. So we can see the DIA passed that level of resistance quite some time ago, back in actually June. So the DIA is actually outperforming all the rest of the ETFs right now. So now we drill down to a 6-month chart, and you don't even see that line I just drew. And so now what we'd have to do is draw a more recent level of resistance support. And this is actually one of the questions I just answered on a live call the other day. People were wondering, where do I draw these lines at? And I always draw mine around the most recent price areas that I'm looking at. And so for this particular one, resistance, i.e. now support is about here, because this is the last price area where it looked like the DIA was flattening out here. All right. So that is now jumping away from that. So that's good. And volume picked up here on this particular day right here. So for this one, I think if it closes up today and volume looks pretty healthy, it doesn't have to be above average, but, pretty healthy, closer to the 30-day average here. Then I think that I may finally, do part 2 of my trade plan, where I said that once if the stock gave me an indication that it would rise higher, that I would go back in and invest the remaining portion of the money here, which I wanted to invest roughly about, $500 on these trades. So that's DIA. If that happens with DIA, SPY is we pretty much looked at that with the S&P, and that one is still too close. Let me extend this line. This one is still too close for me. It makes me a little bit more uncomfortable with this one. This one is still too close. Too much congestion here. So this one I want to wait till it goes up a little bit more. IWM, let's see which one is holding us back here. Okay, so IWM here, we can look here and we can see that the 8-day is pointing down. All right, so the 23-day is still up. Kind of look like it's flattening out. 200-day is still up. But, okay, listening to the story the stock is telling us, using my common sense here, what is the 8-day doing? It's starting to point down. Maybe it'll come down like this one and touch and, go back up. Maybe it'll cross. I'm not sure. But looking at it, you can now see why this one is holding us back. And it had a high volume day here, too, on the last trading day. And it was a pretty heavy close here. Close, right on the 23-day moving average. Now, that doesn't happen that often. You can see here, this is a 6-month chart. You can see here that this only happened, one, two, about twice in the last 6 months as far as this uptrend. If we pull up a 1-year chart, you'll probably see the same thing. It only happens every now and then. So that's a pretty aggressive downward move. So looking at this now, I can see why it's holding me back. But again, if I was managing my account by dollars and cents and emotional, I would close this out because it's losing me money. But this is a temporary situation. What if it's like this? It loses me money here, but then it started rising again. It could be that way. I'm not sure. But the only person that is sure, or the only thing that is sure, is the stock. And that's why I let the stock tell me what it wants to do. And that's why I wait. So that's what I would wait for, even if, I started losing more money. And I only have, $170 invested here. So that's well within my risk amount for this account. So I can wait those type of things out like this because of the small dollar amount I'm investing on these trades. So that's it. That's all I have for you. I just want to give you my analysis on these trades, my thoughts. If you are in these particular trades or trading these ETFs, share your struggles with me. That will help me. It's been a long time since I've been a new trader. Since I've been a coach, I kind of, my memory is jogged by listening to the stories that students tell me and the things they're struggling with. So it is up to you to help me help you. If you're struggling with the patience, struggling with you listen to this analysis and I said some things that you may have been struggling with to help, let me know. So that way I can guide you to profitable territory and speed up your learning curve. I don't want you to take 3 years to succeed like me. I'd love for you to succeed, with this within a year and, be trading, like a professional within a year and having consistent success and well on your way to developing those, qualities I always talk about. It is a work in progress. You're not going to develop them overnight. No more than a doctor develops, I was talking to a student. You know how doctors have to get, the student was having trouble getting emotionally attached to trades. It's like you get emotionally attached. You don't want to close them out. You don't want to let them go. And I said, it's sort of like doctors. When they first become a doctor, I'm sure they're taught. I remember actually reading a book wrote by a doctor, and they talked about when you first start, you're always emotional about, your patients. You don't want them to die, or you get really close to them. Over the years, you kind of get desensitized. He fought that. He didn't want to become desensitized. He wanted to be personal and warm and loving. But he understood why some doctors get desensitized. They see a lot of death and sadness. They see the worst of everything. And so, over the years, he said his mentors would tell him, you can't take this personally. So essentially they work on becoming desensitized to all that so they can think rational, so they can save your life and not get so emotional. I wouldn't want a frantic, emotional doctor operating on me. I want somebody who's clear-headed and level-headed, so we might complain about how cold-hearted they are and how they lack bad manners, but that stuff actually saves our life when it comes down to that. But anyway, they didn't develop that overnight. That took several years. And it's like that with the stock. So, if you get emotionally like this, you're losing money, it's going to take several years for you to work through that emotional and not get emotionally attached to trades, kind of develop the discipline and patience. But I'd say keep at it, choose to develop those things. I fought it. That's why it took me 3 years to succeed. I was like, discipline, patience, please. Those are bad words. Stop cursing at me. I was like that kid who just wanted everything like now. But so those are like curse words to me. So, I fought it and, tried shortcuts, tried all the little parameters and tweaks, and I adjusted the templates and tried day trading. I tried everything. And then, you know what? I came back full circle. After those 3 years, I went back to all of my notes, went back to all of my old trading videos and started all over. 3 years. I wouldn't say it was a waste, but I'm like, gosh, I could have just started here from the get-go and been okay. So, that's what I hope for you, is that I want to shorten your learning curve. So you don't do that like I did. And then if you're struggling with something, just, let me know so I can help you. Or at least share my wisdom and guidance I've learned over these, 10 plus years I've been trading options. So you take care. You have a great week. And again, if you have any questions, just send me an email. Take care. Talk to you soon. Bye-bye.